You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 14th day of November, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. This broadcast is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. Our first broadcast of the day, that's a private broadcast reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, you can do so by going to mytradingiq.com, and at the top of the page it says 5-day free trial. Click the link, complete the registration form, no credit card required, and in most cases, same day, we'll get your indicators indicating, get your desktop set up, and then the following trading day, that's when your trial actually begins. So it doesn't matter what day of the week or weekend or hour of the day that you sign up, you will get 5 consecutive trading days, even if it stretches over a weekend. And you're not just getting access to the live training room, but you're getting access for 5 days to every single resource that our lifetime members, our passport holders, have access to. One exception, and that's the members only workshop every Thursday night at 8 p.m. Eastern. Now, once the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the one that's open to the public. Now, there's 2 different ways you can join this afternoon broadcast live. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. You only have to do that once. Going forward, what will happen every trading day, about an hour before this broadcast starts, you'll get an email. In the email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, where you will have access to the question box so that you can ask questions and participate in the discussion. I don't monitor the chat on the YouTube channel because I only have so many hands and so many eyes. But that's the best way, okay? Because you're in our platform, so you can just ask questions, you'll get our immediate attention, you'll get an immediate answer. Now, there will be days that you're out of the office, away from the desktop, but you still want to join live. Well, you can. And there'll be days when you're busy and you can't join live, but you would like to check it out later. You can. I'm talking about our YouTube channel, youtube.com It's really easy to remember because you already know youtube.com, so you only have to remember the /CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,300 daily episodes archived for your educational and viewing pleasure. For those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick a few days at random. Listen in for a few minutes. You'll quickly spot the thread of connectivity, the thread of continuity that runs through each and every daily live broadcast and through our very vibrant trading community. youtube.com/CFRN. With that said, let's open with our daily devotional and a word of prayer. Scripture today. Now, the topic that we started last week and will be on for the rest of this week, hearing the voice of God. 1 Corinthians 14:33. I'm going to share this with you from the Message translation. So here's what I want you to do. When you gather for worship, each one of you be prepared with something that will be useful for all. Sing a hymn, teach a lesson, tell a story, lead a prayer, provide an insight. If prayers are offered in tongues, 2 or 3's the limit, and then only if someone is present who can interpret what you're saying. Otherwise, keep it between God and yourself. And no more than 2 or 3 speakers at a meeting. Rest of you listening and taking it to heart. Take your turn, no one person taking over. Then each speaker gets a chance to say something special from God. And you all learn from each other. If you choose to speak, you're also responsible for how and when you speak. When we worship the right way, God doesn't stir us up into confusion. He brings us into harmony. This goes for all the churches, no exceptions. Now keep in mind that during the early days of the church, people often met in each other's homes. So perhaps a lot more intimate setting than what you find in the modern day megachurch. So today we'll talk about obedience leads to peace. If you feel overwhelmed or confused about a decision you're trying to make, you're probably caught up in yourself and not God's voice. The Bible says God is not a God of disorder, but of peace. That's 1 Corinthians 14:33. He is not the author of confusion. So if you're feeling confused, guess what? It's not God's voice speaking into your life. If you're a parent, do you want your kids to feel pressure or confused when you ask them to do something? No. You want them to understand what to do and then respond in obedience. God the Father wants the same thing for and from us. As my kids were growing up, one of the most difficult things for them to learn, they knew how to take out the trash. That part wasn't a problem. But separating the recyclables from the wet garbage, that was perplexing, because there are certain things that you would think would be recyclable, like a plastic bag, but it's not. That goes with the wet garbage. And I could go on with examples, but I won't. You get the idea. The only time pressure could be legitimate is if God has told you to do something and you keep saying no. Then the pressure does build. But there's always peace when you say yes to what God is asking you to do. Now, the enemy wants to drive us compulsively, but God wants to draw us compassionately. The enemy wants to take advantage of our compulsions and use them to drive our lives. But God is our good shepherd. He wants to draw us in toward himself and peace. Peter Lord used to say, 90% of what God wants to say to you is encouragement. If all you ever hear from God is negative messages, something's wrong. The wires have gotten crossed. If you feel like God's told you to do something, but you have increasing anxiety because of it, again, the wires have gotten crossed. Something's not right. In Philippians 4:6, the Bible tells us, don't worry about anything. Instead, pray about everything. Tell God what you need and thank him for all he has done. Then you will experience God's peace, which exceeds anything we can understand. His peace will guard your hearts and minds as you live in Christ Jesus. Again, that was Philippians chapter 4, verses 6 and 7. Join me in a word of prayer. Heavenly Father, as we come before you in prayer today, we're thankful for the comforting words in Philippians 4, urging us to bring our anxieties and concerns to you with thanksgiving and promising the peace that surpasses all understanding. Lord, we lay before you the burdens and worries that weigh heavy on our hearts. In a world filled with uncertainties and challenges, we trust in your sovereignty and goodness. Help us, Lord, to cultivate a spirit of gratitude, even in the midst of difficulties. As we present our requests to you, may our hearts be filled with thanksgiving for your love, mercy, and faithfulness. Grant us the peace that transcends our own understanding, a peace that guards our hearts and minds in Christ Jesus. In moments of anxiety, may we turn to you as our refuge and find rest in the assurance of your presence. Lord, we pray not only for ourselves, but also for those around us who are facing trials. May your peace surround them and bring comfort to their souls. As we navigate the challenges of life, may your peace reign in our hearts, and may we be beacons of that peace to a world in need. It's in Jesus' name I Prince of Peace that we believe and pray. And everybody said, amen. Amen. Happy Tuesday. I know there's parts of the world where there is no Happy Tuesday because of what's happening in the Mideast. So we continue to lift those up in prayer. Let me give you these numbers. We're going to start in the U.S. The cash markets or the indices. Now, yesterday we talked about markets being kind of quiet, awaiting the CPI numbers that came out this morning at 8:30 a.m. Eastern. Now, today's just wild. If you haven't looked at the charts yet, you will be looking at them in a few minutes when we go there. We'll talk about it when we get there. Let me just give you the numbers. The Dow's up 482 points, almost 1.5%. The Nasdaq's up 283 points, over 2%. S&P 500 up 78 points. That's over 1.75%. And the Russell 2000 up 79 points. Now for the Russell, that's a gain of almost 5%. I'm going to be honest. I didn't see that coming. But there it is. That's why I always tell you, embrace all possibilities. In fact, yesterday, I gave you my playbook on what I thought could happen when the CPI numbers came out. But I also said, embrace all possibilities, because no one knows with certainty what's going to happen next in the market. It's not possible. However, you can learn to see what the next high probability move is. And once you've learned that, about 20% of the time, the outcome will disagree with you. How do I know that? Well, in our Logic 247 alert channel, we've issued over 15,400 individual handcrafted alerts. And over all those weeks, all those alerts, we've averaged 20% or less of the alerts being stopped out on a very simple process that I teach all of our passport holders based on market structure, and just smaller time frame chart that you actually execute on. And we'll go over those in a minute. Kind of a rough week, but we'll still go over them. Don't sweep anything under the carpet. Crude oil up 63 cents, trading 78.89 last. That's a gain of almost 1%. Gold up $17.10, trading 19.6730 last. It's a gain of almost 1%. Silver up 79 cents, trading 23.16 last. That's a gain of over 3.5%, and just shy of $5,000 per contract traded. In the Asian markets at the close, the Nikkei was up 110 points. Shanghai rose 9.5. The Hang Seng dropped 29. No movers and no shakers there. And in the European markets at the close, FTSE up 14 points. The DAX up 269, which is 1.75%. CAC up 98. The CAC, that's a gain of almost 1.5%. So that gave us a mixed day in Asia. It was a green day for the UK. And so far, it is a big green turnaround Tuesday here in the US of A. Now, let's talk for a second about these CPI numbers that we warned everybody would be out this morning. Here's the subtext or the subheadline. On Tuesday, today, the U.S. Bureau of Labor Statistics reported that the Consumer Price Index for all urban consumers remained unchanged in October, following a 0.4% increase in September. Over the past year, the All Items Index rose 3.2% before seasonal adjustment, marking a notable trend in consumer pricing. Now, that's a fact, but I'm going to throw in some opinion. The closer we get to this presidential election, the less stock you should put in these economic reports. Not accusing anybody of anything, I'm just using common sense here. Now, the October CPI highlighted a continuous rise in the shelter index. That means people are having a hard time finding a place to live that they can afford. That's a problem. Which brings up another thing. Here, let me jot it down, so maybe I'll remember to talk about it in a minute. Okay. The October CPI report highlighted a continuous rise in the shelter index, balancing out a significant 5% drop in the gasoline index. The juxtaposition resulted in an overall unchanged, seasonally adjusted index for the month. Broader energy index decreased by 2.5%, further contributing to the stabilization of consumer prices, according to the report. U.S. Labor Department noted that the food index saw a modest increase of 0.3% in October, continuing its upward trend from a 0.2% rise in September. Notably, the cost of food at home mirrored this increase, while expenses for food consumed away from home rose even higher, in fact double, 0.4%. Looking at the 12-month period ending in October, the All Items Index 3.2% rise represents a deceleration from the 3.7% increase seen in the previous year's period. Over the past year, the energy index decreased by 4.5%, contrasting with the food index's 3.3% increase. After the release of the report, the U.S. stock market presented a varied response. The Dow and the Russell 2000 index both noting upward movements. Now, this was written hours ago, so everything's flying high at the moment. So that's the story behind the numbers that created this incredible you probably came in this morning and looked at your charts and go, something's broke. No, it's not broke. In fact, today's Tuesday, and I think in two different markets, we've already exceeded the highest weekly trading zone for the week. And when that happens by a Tuesday, typically those markets will be at the other end of the spectrum by close of business on Friday. In other words, if we break the highest weekly zone in any market by Tuesday morning, historically, that market will be at or near the lowest weekly trading zone by the end of the week. So, the other thing I wanted to mention is San Francisco. Nancy Pelosi said there's no problem. What problem? Doesn't exist. Gavin Newsom, on the other hand, her nephew, he said it can't physically be done. There's just no way to fix the problem. Until they found out Ping Pong was coming from China to meet with Biden in San Fran. And the pictures they showed last night were mind-blowing. You would have thought they were photoshopped. I don't know that they weren't. But all those homeless, encampments along the streets and all the poo-poo on the streets, gone. All the public walls, public spaces, the bus stops have all been, hosed down, cleaned up. It's glistening. It's like a shiny diamond. Now, remember, Nancy said there never was a problem. Gavin said you can't fix the problem. And in a matter of days, fix the problem. Now, they have erected some facades. I don't know if you know what a trompe l'oeil is, but it looks like you're looking at a, in this example, you're looking at a street that is, man, everything's glistening and shining, because they know that Ping Pong won't get out of his limo and walk around, but as he drives by, it's like a movie set. You've probably seen documentaries about the old westerns, and when you would come riding into town, it looked like an old western town. But if you got a shot from above, from a helicopter or something, you could see that it was all a facade. It was all hat and no cattle. It was a prop, but a very convincing prop. So, I guess I'll just leave it at that. I get worked up and then we won't get anything done. So, let's get something done. All right, Logic 247 continues to be a thorn in my side this Tuesday. But that's okay. We're in week 276. Now, the last recap Valerie did was 7 p.m. last night. Of course, she'll update it this afternoon, this evening. The markets opened Sunday night, and futures trade around the clock until Friday afternoon. There is a 1-hour break every day. Like right now, we're in the Tuesday session. That will end at 5 p.m. Eastern. Tonight at 6 p.m. Eastern, that will begin the Wednesday session. So, since the markets opened Sunday night at 6 p.m. Eastern through 7 o'clock last night, we had issued a total of 14 alerts. And at that time, we were still waiting on 2. That gave us 12 actionable alerts, of which 4, or 33%, would have been stopped out based on market structure and that risk profile that I teach all of our members in their unlimited one-on-one mentoring sessions. Now, yesterday we were sitting at 67%. So basically cut that in half. And hopefully with today's alerts and tomorrow's, we'll get back to where we normally are, which is 20% or low. We've averaged over the last 276 weeks and over 15,400 individual alerts, 20% or less being stopped out. So at least we're headed in the right direction compared to yesterday. There was only 2 stop outs yesterday. I wish Scam Likely would stop calling. Everybody's got to make a buck, right? Wish they'd find a less annoying way of doing it. Okay. Now, the logic alerts are based on current price action, but there's time built in for you to get the alert. Go to your 30-minute chart. See the window of opportunity that the alert represents, and then be prepared to take action, doing exactly what Michael teaches you in the live training room every trading day when price gets to the window of opportunity. Now, the purpose of the alerts is not so you just can say, I'll just trade the alerts. Why bother learning how to trade? That would be a tragic mistake. Okay, the purpose of the alerts is to help you learn to read the charts, spot the windows of opportunity, so that you can one day become self-sufficient. If your plan is to trade for a living, you do not want to be dependent on somebody else to tell you when to get in and when to get out. Okay? You need to be able to look at a chart, understand how price flows, and know with a great degree of certainty what the next high probability move is. It doesn't happen overnight. It takes a little time, but you'll get there if you hang in there. Okay. Now keep in mind, we're not teaching you how to trade any one specific market. We're teaching you something far more important. We're teaching you how to trade. Price flow is the same across all markets and all time frames. So once you learn how to trade and how to read the chart, trade anything. Any futures market, any individual stock, crypto, Forex, ETF, because price flows the same across all markets and all time frames. Now, there's people who are going to tell you, oh, no. You can't trade gold the same way you trade Walmart. Yeah, you can. But the reason they tell you that is either because they don't realize themselves this truth I've just shared, or they wouldn't be able to sell you one thing after another thing after another thing. We only have one thing. That's the passport. The all-access pass to everything we do, everything we've ever done, and whatever we do in the future. No recurring fees, no upsells, ever. Now, the concierge alerts are based on historic price action. When historic price action meets current price action, that's where you will find some of your best high probability, low risk trade opportunities. These do not come out around the clock. They're posted as a static report shortly after the Globex open. So the Tuesday session began last night at 6 p.m. Eastern. 20 minutes into the session, I got this report published. Okay. Now the first thing you do when you get the report is just worry about the markets that you actually trade or are learning how to trade. We'll use the ES as an example. First thing you want to do is make note of where price is at the time the report is published. It'll always be between these two numbers. Then you're going to draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. Pretty simple. Now, with the logic alerts, I've already looked left for you to spot potential obstacles to the trade. That's why you'll see multiple targets in the logic alerts. There's an initial target, which is designed to help you get your goal for the day. But then you'll often see a second, a third, a fourth, a fifth, and then the final trade to target. With the CTAs, you're stepping up your game. You're looking left yourself to spot potential obstacles. And you've got to learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the zone overhead. Price is below the 30-minute BBC, it's trying to get to the zone below. Pretty simple, but very important. We've published the zones since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, carved in stone for the entire week. They don't change in any way whatsoever. Once you really learn how the zones work in relation to price, they will become one of the most important tools in your trading toolbox. Now here's the hard part. You got to resist the urge to make it more complicated than this. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, because this broadcast is open to the public, if you're not a member or trial member, you didn't get these numbers last night, these targets. So, if you want to grab a screenshot, you can. If you're watching after the fact, just hit pause on the video on the YouTube channel and jot down the numbers that are important to you because they represent the markets you trade. Okay? All right. Let's jump to the daily chart. That's where we always start. Why? Well, because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. When the institutions trade, that moves price. When retail traders trade, sure, you can make money. But if you're trading 1 contract, 10 contracts, 20 contracts, you are not moving price. Okay? So no matter what market you trade, it might not be the S&P. You might trade crude, or you might trade Walmart. You might trade Bitcoin, or the British pound, or one of the spiders. Okay? But if you'll spend 2 minutes with the daily chart before you get down to the business of trading, it will help you tremendously. Yesterday, we ended with a doji, indecision. We talked about the next potential obstacle being this trend line, which we blew right through, and then the 24% fib. And as you can see, that's where we're sitting right now. We've spiked it, but that initial irrational exuberance off those CPI numbers, it's starting to wane a little bit. Shane wants to know, Dwayne, why does your live stream on YouTube not show up on the live stream section? Well, Shane, let me open YouTube. And let me search CFRN. See, yesterday, stream is there. Yeah, it's working. I'm watching it on YouTube right now. So, and so are 9 other people at the moment. So, I don't know the answer, Shane. It's okay. All right. So now let me close that on my phone so we don't have an echo. Okay. Hopefully that answers your question, Shane. All right. The next obstacle. Now, Stefan posted a weekly chart that showed the next major obstacle as 45.66. Okay, we've hit the 24% fib. If we close above that today, then our next obstacle will be this high, which lines right up with his weekly chart. Okay, then the next major obstacle will be, let's see, this one's 45.66. Then the next major obstacle will be 45.80.75, and then 45.97.50. Okay. All right. The green line is the BBC, stands for bull bear cross. When price crosses above the green line, we're bullish. We anticipate higher prices. When price gets below the green line, we anticipate lower prices. Really simple. And you'll see the same thing on my 30-minute chart. Now, we haven't hit the highest weekly zone yet on the ES. That's up at 4,600. But boy, we're close, and it's only Tuesday. And look right here. The step line has crossed the BBC. So what do we expect from here? Well, once we take out this low and this low, then price will most likely go back to the zone. And if there's some sideways consolidation, the BBC will rise up to the zone. Okay. Now, this is all news based, and we do not promote trading the news. Okay. It's kind of like gambling. Anybody that was long this morning got lucky, but you can sure see that perfect stack. Price, step line, blue and climbing, BBC. But now you have an indication that the high of the day is in at 45.20.75. Now, I could be wrong, but I'm pretty confident with that. Now, I told you there's over 15,400 individual alerts in the Logic 247 channel. Every single one of them is a trend trade, as defined by the 30-minute chart, price, and the BBC. If price is above the BBC, I will only issue long alerts. If price is below the BBC, I will only issue short alerts. Okay. Now, Michael in the live training room, he does counter trend. okay? But he also keeps an eye on the bigger picture. So a counter trend trade from 44.97, 44.92, that'd be a nice 7-point trade, and it will probably come to pass. Because right now the step line is directly above price, so that should be good resistance. Notice on the previous candle it was. And then we just watch for the pullback to the BBC. Okay, Michael should be here. He just popped in. So we will pick up with the rest of the markets after Michael gives us a recap of what happened in the live training room. Then we'll go live for 30 minutes on the TradingView platform. And then I'll come back. We'll finish the rest of the markets. And we'll close out with a good word for the day.
All right.
Welcome, Michael.
Thank you. All right. Here we go. Bring it over here. There it is.
Looks good.
All right. All right then. Good afternoon, everyone. Today is Tuesday, right? Yes, Tuesday, the 14th day of November, 2023. If you have not taken a free trial with us and you'd like to, go here to mytradingiq.com right here. Hey, let me refresh this. No credit card required for the trial. Sign up for your free 5-day training now, 9:15 to 11:30. I kind of wanted to put that up there, but anyway. Sign up for the free trial right there. When you click that, you can be brought to this page. All we ask for is this stuff. If you use TradingView, give us a TradingView login ID. If you use NinjaTrader, give us your NinjaTrader machine ID. It'll speed up the whole process, right? Now, yeah, I suppose I should go through this. If you're going to sign up for the free trial, you should go here and download the trading platform, right? Whatever one you use, download the trading platform. In the room for charts, we're using TradingView, right? For trading, I use DT Pro. For charts, I use TradingView. The rules for the actual trade setups are right here, okay? So you can familiarize yourself with the rules before you get into the room in the morning. Then it'll make a little bit more sense to you. You can watch some of these videos right here. These videos are from the room, okay? We need to update these videos. They're a little outdated now. But if you look at these videos, then you'll see what's going to be happening in the room. These videos, they don't show the high probability trades anymore. And they probably go into a little too much detail about stuff that we haven't done in almost a year now. So yeah, let's get into the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures. And at the bottom, today is the 14th day of November, 2023. Made 74 ticks in the NQ, 10 ticks in the Russell, 1 tick in crude, and 1 tick on the ES. That put us at 442.50. I had that 1 tick there and that 1 tick there because I hadn't taken a single trade on either one until the very end. And I managed to get 1 tick out of each one on the trades that I took. Anyway, so that puts us at 442.50 on the morning session today. It took 9 minutes and just 1 trade to get to the goal for the day. With 11 contracts on, we're at $1,650 when we closed out that trade. It was an NQ 30 tick trade. All right, and we took the total. That is not the right number right there. Let's do that again. It should have been 2 more than what I had. It's 15 is what that should be. It was 2 more than what I had. I had 13, and it was actually 15 trades. So on the month now, that puts us at $4,640 over 10 trading days, averaging $464 per contract per 2-hour session. On the year, we're at $94,477. It's over 217 trading days, averaging $449 per morning session. If you were to quit trading when you get your goal for the day, if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you'd have only had to work 73 3/4 hours, and you would have averaged $2,486 per hour. I don't know about that. Shane was just saying something's going on with YouTube. Okay. Anyway, that is all that stuff. Now let's get into the trades. All right, on crude oil, we just had one trade, and it was right at the end of the session, right here. We took this blue arrow and we ended up with one tick on it. This was the number we were trying to get down to right here, where we're saying the weekly trading zone. This is the number that the DOM showed. We got down to that, then we pulled back up and it gave another entry going down. I didn't, I was done trading at that point, so I didn't grab that. I wasn't actually completely done, but I was done looking at crude oil. You can see it did continue going down though. It went down to the midpoint between this zone and the next zone, and it looks like it's probably on its way down to this weekly trading zone right now. But that was crude. We just had the one trade. All right, looking at the blue arrows starting. There was one here that would have stopped you out and one here that would have gotten it back. And that was it for the crude today. Not a lot of activity on crude. Now, we did have CPI come out this morning, and it's interesting that they call it bad news. I think it's bad news if you look at it. I mean, it was, well, here, we'll look at CPI, which is today. So the consumer price index, what we pay for goods, was lower than last month, or lower than forecast. And month over month, it was lower than what was forecast. And year over year, lower than what was forecast. So we're paying less is what it's saying for our goods, yet they mark it as bad. Now, I'm guessing that they're marking that as bad because they don't want it to be that way just yet. Bad means they're probably going to raise interest rates again, is what I'm thinking. Anyway, just my thought. Waxy. All right, so the Russell, let's did have a few trades here on the Russell this morning, so let's go back to the beginning of that. Okay, go back to the beginning of that, and let's see. Here we go. All right, so on the Russell, our first trade in here was a break even. Then our next trade on the Russell was right here. We picked up 10 ticks profit on that one. And that was all that we had for profitable trades on the Russell. We had a break even there, and that was all that we had for trades on the Russell. Then here we didn't do anything, but we had the blue arrow that worked out okay if you stayed in it. This one, same thing here. Actually, that would have been really close to stopping you out. I don't know exactly. Then we went all through here. I was training at this point. Actually, was I? No, I wasn't. But we didn't have any good trades all through here. Then we started the training right in here, and I missed that one. I missed that one. I'm only talking about the blue arrows. All right, so then I was finished training, and I missed that one, but I did take this one. I ended up with a break even on this. This was the number I was looking for up here. It did go through that number, and then we get into the break. During the break, there was one blue arrow right there. Okay, and that was about it. That was about it for the morning session. So during the break, there was just the one blue arrow right here. There were some other arrows in here. All seem to have worked out pretty well. But that was it for the blue arrows. On the ES now, we didn't have any trades in the ES until right at the end here. We took this one right here. And this took forever to give us that one tick. I was really looking for it to get up to the prior swing high up here, but it never did it. We did have this one blue arrow back here that I missed. And that was it, just one blue arrow. Right, if we go back here to the beginning, when the numbers came out, the CPI numbers came out. Look at all this stuff that happened. This was before the CPI numbers came out. And the numbers came out. We had this huge gap up right here. And all these little black arrows kept popping up. Right? We had one blue arrow back here. I wasn't trading at that time. I was almost trading, but I wasn't at that time. All right, so now on the NQ, let's look at the NQ. Okay, sliding it all the way over here. See, the majority of the blue arrows were there in the majority of our trades, but comparatively, it wasn't very many trades for us on the NQ this morning. Right, this was our very first trade on the NQ, and we got 30 ticks profit. First blue arrow, first trade we took, 30 ticks profit. Then the next trade that we took was over here. Now the NQ, my DOM wasn't keeping up very well in the beginning. It caught up after a little while, but on this one right here, I definitely should have had a break even, but I ended up with a stop out because my DOM wasn't keeping up very well. So I had a horrible entry and I ended up stopping out, but I definitely should have had like 10 ticks of profit on that. The next one was right there and right there and right there. I didn't take any of those. This is the next one that I took right here. So we went from 30 down to 10, then up to 40 right there. And then we took a little more profit on that one. Took 16 ticks, put us at 56. And then this one we got 30 ticks to get us to 86. 86? Yeah, 86. So I went to 56, then 86, and then we stopped out after that. Went down to 66. Went from 66 up to 82 on this one, and missed that one. I think we're in the lesson plan here. I took this one. As soon as we got out of the lesson plan, I took that one. And we were from 82, we dropped down to 62 at this point. And then I had another one in here, went from 62 to 74. I don't know what this one I didn't count, so I gotta go back and count that. Okay, so we didn't end up with, right, we went from here, I'm not sure I should have had a right around there. But anyway, we did pick up some more here. We went from 62 to 74, so I think we got 12 there. No, I didn't count that red arrow. I'm not sure why. So I'll just go and count it after. So we ended up with 54 instead of 74 this morning. It's now 12:58, so I'll quickly go over. During the break, we had a blue arrow here and a blue arrow here, both very successful arrows. Both worked out just fine. Now I got to fix the spreadsheet because this number should be 54, and this number should be one more. All right, so that changes the numbers a little bit. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures. And at the bottom, today made 54 takes on the NQ, 10 on the Russell, 1 on crude, and 1 on the ES. Put us at 342.5 on the morning session. Today it took 9 minutes and 1 trade to get to the goal for the day. And we took a total of 16 trades. Minimize that and minimize that. And oh goodness, I gotta get back in here. Hold on before it's too late. Let me go here and there and get this ready. I normally have this done by now. Yes, if you have not taken, hang on a sec. Let me fix this. We'll go to stream and we'll change this to today. Today, save. There we go. And now we can hit refresh on that. And stop that, change that to that and that. All right. So if you have not taken a free trial with us, that's where I was going over here. Then just go ahead to mytradingiq.com, sign up for the free trial right here. No credit card required for the free trial. Okay. And that's it, guys. With that, I'm going to jump into the live stream now. I'm going to bring the charts back up. So that is what they see. And here we go. All right. So we are now beginning the live stream. If anybody has any questions, all you have to do is type them in. Okay, if you're watching in live stream or if you're watching after the fact and you have questions, you can You can email us at support@cfrn.net or support@mytradingiq.com. Either one of those will work. And yeah, if you haven't taken a free trial with us and you want to take a free trial, all you have to do is go here to mytradingiq.com and click on this right here. There is no credit card required for the trial. Right, click on that. It will bring you to this page right here. Fill out this little form, and you'll be sent everything you need. Right. If you're watching in TradingView and you fill out this form, give us a TradingView login ID right here. Okay. And we'll be able to enable your indicators for you right away. All right. So this is crude oil over here. Now, crude oil is headed down to the weekly trading zone. These horizontal lines right here are weekly trading zones. For those of you guys who don't know, the weekly trading zones are delivered to you. Are delivered to all active partners and passport holders every Monday morning at 6:15 a.m. Okay, every Monday morning at 6:15 a.m. All right, so crude is pulling back up to test the ribbon right here. We have bearish separation in a long-term trend. So what we're going to look for is a down close on this bar. That'll give us a shorting opportunity. Right, it's going to be 53 down to 45. 8 ticks below the top of the bar is what you want to sell. Because the bar is going to close right here at 46. 7 ticks below the top of the bar. That's because these are 7-tick range bars. Okay, there's 7-tick range bars, so I know exactly how big that bar is going to be. It's going to be this big. There it is. Triggered me in, gave me a tick of slip, and highest probability short trade right here. Now that should run right down to the weekly trading zone right now, down here to 78.20. Okay, there's pretty good numbers down there at 32. But the rule is after 4 days in profit, I bump the stop to break even. Now, where is that rule written, you might ask? That rule is written actually right here. If you go to mytradingiq.com, you go to trade rules, and right here in risk management, it's a 7-tick range bar, has a 10-tick stop, which we have. 10-tick stop, which we have. And it goes to break even after 4 ticks in profit. After 4 ticks in profit. All right. So that's what we're waiting for. All right. We should get the 4 ticks in profit. It should actually go all the way down here. But we'll just go back here and see what it does. All right. Right now it's pulling back a little bit. Our stop is in place. Our stop is exactly what it should be. If it stops us out, it stops us out. But it should push down right here and get down to the weekly trading zone. Okay. The last blue arrow over here was a great trade on the NQ. If I remember right, the one right before it was a great trade too. Blue arrow before it, yep, it was. So it stopped us out on the crude. Sad, but true. It happens. So we got minus 10 ticks on that crude trade. Now we'll just wait around and see if anything else pops up. There was something I read that Tesla finally moved. Let's take a look at this. This is one of the things that Dwayne wanted me to look at yesterday. Now, one of the things that I was saying last night is we didn't look at it on a very small time frame. Okay. See what kind of trades you might have gotten on a very small time frame. All right. In this case, we didn't get any right away, but early this month, there's some great opportunity in here. Now, this is a low price stock, so if you have like 10,000 shares of this, and you get a quarter in price movement, then that's $2,500 bucks. Or if you get a dime in price movement, then it's $1,000 bucks. So like right here, we get the black arrow. Right here, we got this black arrow. You shorted it 3 1/4. It dropped a dime down to 3.15. Back here on this black arrow, if you shorted here at 3.34, that dropped down to 3.24, another dime. So each one of those would be $1,000 bucks. That's not even actually day trading in this case because the order would have been placed on 9 November. And well, I guess it would have been day trading in that case. Yes, yeah, it would have been right to the end of the day. This would have been 10 November down to later in the day, about an hour. And over here, this one right here, I'm just showing what can be done with equities. If you have an equity account, you like to trade equities, the same thing. If you have, it's a modest account, $20,000, $30,000 account. It's a modest equity account. And if you manage to get something right here, from here, 350 up to 361, another dime. So each one of those is $1,000 bucks. Just a thought. Dwayne had looked at this. He wanted to look at some of these low price ones that he had found yesterday. But the same thing. I think there was another one that I found last night.
There's one called ENPH. It's the biggest mover of the day, up 14%. ENPH.
Got it. Okay, and it's a $90 stock, so we're not going to look at this one on a 3 range. We would look at this one. Yeah, we definitely look at this one on a larger time frame. $9 stock. We'll give it a quarter. Okay, so every bar is 25 cents. And look at there. We had blue arrow, blue arrow, green arrows. All the green arrows are working out well too. Go back to the beginning. It did have a lot of volatility today. I don't know if it had news. It must have had some news this morning, right? Because this was the open right here. This was the open, huge gap. We had one blue arrow here sending it short. That worked out fine. We had the next blue arrow was right here. Beautiful long. Next one here, chomp sideways a little bit. That brings us to where we are right now. So that worked out just fine. This is using a quarter range, right? 25 range. So each bar is 25 cents. So in this one right here, with an $87 stock, you're probably not going to buy 10,000 shares of it, but you can buy 500. And in this case, every buck is 500 bucks. So it's 87.36 all the way up to 89.75. So there's a couple of bucks right there. And again, it pulled back, gave you another one, 89.01 up to currently 90.30. So
I don't see any news. Oh wait, here's news. Is there news? Nope.
Yeah, there must have been something. There was no news that made ENPH jump like that because it had a huge gap this morning.
The only news I see is that it's one of the biggest movers midday.
So somebody knows something.
Somebody knew something.
78.66 all the way up to 83. It's got just about a 10% gap. Just about. It's about an 8% gap right there. Good stuff though. All right, so we just wanted to illustrate for you that you can use our stuff on anything. You just got to find the right time frame. You see how the no trade zone works in here. When the markets are flat is where you want to have the no trade zone. When it changes directions and where it's flat, you want to have your no trade zone. Outside of the no trade zone, we have long-term trend. That's where you want to be trading. Okay, right in here, 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 here.
A couple of solar techs, which solar's been in a downtrend in general, but SEDG is up 11% today.
B?
SED is in Dwayne.
Run D's and talk. Or Dwayne.
Solar Rage, yep.
This one's priced about the same, so the sensitivity should be about the same. And yeah, that gave some good indications here too. From today, had a lot of chop right through here, but
First Solar is up 11%. That's FSLR.
Yep, big gaps at the open on these. They're all on the NQ. Yeah, another one. Lots of opportunity. The blue arrows are killing it on all these. If you only learn to do one thing, just using these blue arrows would do well for you. Okay, if you only learn how to do one
and you
thing.
got to learn to have the patience for the blue arrow to appear.
And on these guys, you can tell. Well, if it's going to be an up close, if it's going to pull it out of the oversold, it's going to be a blue arrow if it hasn't hit the black line. Okay, if it's come down and hit the ribbon but not the black line, and it's going to pull it out of the oversold, that's going to be your blue arrow. Okay, I was going over this morning when I was going through the lesson plan of the ribbon and how the ribbon's built and how the arrows are triggered. All part of today's lesson plan. All right, so let's go see, do we have anything else to trade right now? The NQ is about ready for a trade right here. This is into the ribbon. We're oversold, so this could give us a blue arrow right here. It's going to be 73 up to 77 on that. 73 up to 77 on it. Means the up close right here. If we get the up close and it pulls it out of the oversold, it'll be a blue arrow trade. If it doesn't pull it out of the oversold, it'll still be a trade. It'll be a ribbon trade. Okay, that's what I was trying to tell you about these in here. The blue arrow trades, if it's oversold when it hits the ribbon, even if it doesn't pull it out of the oversold, it's still a valid trade. Okay. it's still a valid trade. You're just not going to have the arrow on that bar. You'll probably get the arrow on the next bar. Okay. The reason the blue arrow happens is because it comes out of the oversold. The arrows are triggered by coming out of the oversold. Right? The long arrows are triggered by coming out of the oversold. If it stays in the oversold, then it's just a bounce off the ribbon. If you go here to trade rules, it would be this right here, a long trade without the slingshot. Price must touch ribbon on the pullback. And you're not going to have the ribbon coming out of the oversold. Right? That is the rule. So, still waiting for that NQ to trigger and start moving. I don't know if that ended up giving us a blue arrow or not. It did give us the blue arrow. Okay, so it did trigger. And that should start moving upward now. This is the weekly trading zone right here. So we should have up above, we should have a midpoint up here, not too far away. The next zone. Come on, midpoint. Where are you? There it is, way up there. I guess the midpoint's way up there. Okay. So still a valid trade here on the NQ. All right, I'm in it. I'll show it to you in a second. It's not looking great right now, but here it is. And it's about to stop me out, and it just did. That's unfortunate. Well, the crude oil ended up going in the direction that it should have gone. It just stopped me out to the tick first, or a little beyond the tick. This one definitely didn't go in the direction that it should go. Not yet, anyway. Let's go back to this one, FSLR. The last arrow that it had was right here, and it gave a higher swing, which is all you need. But you're not going to get anything in here. You could get another one now. It's just come out of the no trade zone. Okay. And for anybody that's asking, I don't know if anybody's asked any questions in the live stream. Nope, not yet.
Not yet.
Okay. So, for any stock that you want to look at, you just have to adjust the sensitivity so that your no trade zones don't knock off all the arrows. If the sensitivity was adjusted incorrectly on here, like let's say the sensitivity instead of being 0.01 was 1, everything's going to be in a no trade zone. See, everything's in a no trade zone. You don't get any arrows. Now, if you know what causes the arrows, that's not such a big deal, because you can still look at it and say, well, this is where an arrow would be, and this is where it would be, and this is where it would be, and this is where it would be. Every time it's coming out of the oversold, the long-term direction is bullish. But it's nice to have the arrows there just to confirm everything that you know, right? And then you get the arrows that actually help you to understand what's going on. You get these little arrows, the overbought and oversold arrows, telling you to pay attention and that a trade is coming up. Okay, that's what those are for. Now, yesterday I was trying to put the alert that I created for that on yesterday, and it took forever. It started to trigger after you guys were done. If you go look in here, I think I shut it off yesterday, but if you look at the log, this is from this morning. This is all from this morning. Yesterday, here it is. These are the ones that I was trying to show you yesterday. When we finished yesterday, they started triggering right here. Remember, I was trying to show you, if you were here yesterday, you can see that I was trying to show you yesterday on the crude oil, these alerts. When they started printing these little arrows, that's what was set up. You have the potential to do that and turn that on if you are a passport holder or an active partner. All right, it's now 1:15, and so far we had 2 stop outs. That's unusual for us in here. We'll see if we get anything else though. All right. All right, so on the Russell right here, we need that to pop out of the oversold like it just did and give us the green arrow like it just did. What I would anticipate on this is that it's going to get up to this level right here. Now the Russell, the DOM doesn't really give you all that much to look for in the Russell. Right now it's looking like 94.7 is the number it wants to go up to. There's a couple of numbers on the downside that are beyond our stop down at 92. But since the chart is suggesting it's going to go up, 94.7 is where it says it's going to go. And the prior swing high is actually right. I can do this one. 94.7. And the swing high is right there at 94.5, but the DOM is saying 94.7. Okay, so that's what the DOM is saying. And here's that trade. Okay, now this stop will go to break even after 4 ticks in profit. There you go, break even after 4 ticks in profit. Now it should make it up to right there at 94.7. If you don't know where I got that from, well then take the free trial and you'll learn how to read the DOM. It's on Thursday's lesson plan. Okay, it's in Thursday's lesson plan. All right. Yes, tomorrow's lesson plan. Tomorrow's is a good one. Tomorrow we do the leg lengths. Tomorrow's a good one. I like doing one tomorrow. And today was the ribbon and the ribbon and the BBC and the context, all the colors that you see right here. Everything that is right here was today's. Tomorrow we have the slingshot and both slingshots, that slingshot and that slingshot. And tomorrow's lesson plan. And by showing you both of these, it brings me to the DT Pro and Ninja Trader as well. So there'll be a comparison to DT Pro and Ninja Trader while I'm doing these slingshots tomorrow. And also, leg lengths. Leg lengths are important. Okay. All right. So I am now waiting. Does anybody have any questions about anything now? We need this to give us a lower swing to be able to take another trade in that direction. This to give us a higher swing to be able to take another trade in that direction. And this is changing directions right here. I don't know why I have the crude oil over there with the 25 range, but I do. That become crude oil. That was some other symbol a few minutes ago. What I actually wanted to look at over here was Tesla on the 30-minute. Because I heard that it had a run yesterday. And we had been bouncing up against that. And there it is. It did have a run yesterday. Right, well, that's actually today. This right here was the bottom of the gap that we needed to fill. Right? We didn't make it up to the top of the gap yet. Drawn in. That right there is the top of the gap that we need to fill. So we're halfway through the gap right now. Right? We gapped up into the gap that we needed to fill. That's funny. Well, it's still got some more work to do here. Tesla does to fill that gap from last week or the week before, actually. Right? It's back here. Wow, it was last month. These gaps on equities take forever to fill sometimes. The 19th, it's almost a whole month to get that gap filled. They do fill them, but it takes forever. All right. We have PPI coming out tomorrow morning. Just FYI for all you guys who are like to be there, who like to be there at the news at 8:30. That's 8:30 Eastern time. If you like to be there for the news at 8:30, then we have PPI coming out tomorrow. I would probably not trade during the PPI. I don't think it's going to be as explosive as the CPI was this morning, like ES anyway. But it still might jump your stop. So be careful. When the markets get thin, this was a question that was asked to me the other day when I was saying watch CNQ when the news comes out. See, this is what it's like normally right now. The new normal that we have right now, this is what it's like. You know, a couple of hundred, from 150 to 200, roughly. When news comes out, you'll see these numbers get down into the teens. You know, and you have huge gaps in here when the news comes out. And one of the questions that somebody asked me the other day was, when do you start trading again? When these numbers start to get back to their normal amounts down here is when you should start trading again. Okay. When the volume is back to normal, when players are back in the market, that's when you start trading again. If you try to trade when there's a big spread in between these, you're going to lose money on every single trade before you start making anything. Okay, you're going to lose the spread at a minimum. So the crude made it all the way down, almost to the zone. It's not quite there. Right? We're just going sideways on the rest of these. It's really slowed down. We can look back at equities though. I hear Dwayne in the background. I know he's back there thinking of equities. You got another one you want to look at, Dwayne? I had a couple of them yesterday. EVGO, I think, was the one I saw last night. EVGO. I think that was right.
Yep.
And see that big gap up. That was a couple days ago. Now this on a 30-minute chart is nothing. You don't want to look at that on a 30-minute chart. But this is one of those ones that's smaller. So if you had 10,000 shares of that, you put it on a 3 range is what I was looking at. And if you can capture these things like this on a 3 range, you know, you only need to make 10 cents to make $1,000. And you know, you get your blue arrow right here, 290. It ran all the way up here to 305, $15, 15 cents, 1,500 bucks, almost 276. Ran all the way up here to 297, 20 cents, 2,000 bucks. That's same day stuff. It takes like an hour. And it happens again and again and again. You know, if you trade equities and you want to do a little scalping like that, this is perfect for that. I was just, you know, I texted you guys. I texted you about that friend of mine that's what he used to do. You know, he had a $100,000 account and he used to just go in and buy, you know, buy 1,000 shares of something and pop up a quarter every day. And you know, this one, it was one of those cyclic things where if you bought it here, it would pop up a quarter almost every day. It would go up a quarter. If you bought it at the right time, well, you know, that's $250 a day extra that you get to make. And if you do that long enough, you know, eventually it'd be $500 and then $1,000 and $2,000. But with this EVGO, you know, this is just an example. If you had even a smaller account than my friend had, you know, this you can do with a $30,000 account. And I'm not even talking about the shorting, really. I'm just talking about going long. For the shorting, you have to wait for you have the uptick rule and all that kind of stuff. That I suppose that is something that we should mention. We're talking about stocks here. It's not futures. With futures, you don't have an uptick rule. You don't have to worry about pattern day trading and all that kind of stuff, all those rules. If you're going to do that with equities, you do have to worry about that stuff. And you have to have an account with at least 25,000 in it to short and for pattern day trading. So, but that's if you're going to trade more than 3 times. I think day trade more than 3 times in a week. I'm not exactly sure what the pattern is, but it's something like that. I'm not exactly sure what the pattern is for that, but anyway, with equities, you got to worry about it. With futures, you don't have to worry about any of that stuff. Okay, with futures, you just open your account, you work on margin, you can go short or long anytime you want, as many times as you want, and it's actually a benefit to day trading futures. There's, knock on wood, there's still a tax benefit to day trading futures, as opposed to anything else. That is right, Caleb said. That is right. Okay, that's what I thought. Okay, you don't have to worry about that stuff though when you're trading futures, none of it. Okay, but even with this, like with the EVGO, if you had, let's say you had the $30,000 account, if you placed one of these trades a week, you made an extra grand a week. That's, you know, or even in this case, 290 up to 311. So that's actually 21 cents with 10,000 shares. That's $2,100. Replacing one trade. That would have been today from 10:09 to now at 12:28. If you do that once a week, you don't have to worry about the pattern day trading stuff. Just throwing it out there. Just let you know this. You can use what we do for anything. For anything. You know, if you want to do it on like Forex, you're not going to do Forex so much on range bars because Forex has the spread. But you do something like the EURUSD, and we'll go with forex.com on that. And you do that on like 1 minute. Okay, now it comes back up. You got to adjust. Obviously, with Forex, you got all these decimal places, so you got to adjust your no trade zone, your sensitivity for that. So how many decimal places are there? 5. So there should be 5, 6, 3, 4, 5. Okay. Adjust your no trade zone. And there you have it. You can do it with Forex too. LTH. Okay, this one. And what's that priced at? 14.50. Okay, so we got to set the sensitivity on that. This is way too small. It's probably about right. Set the sensitivity to show some no trade zones. That's too much. Okay, smaller. There we go. That's a little better. It's still not exactly right, but it's pretty close to right. So here it is with every time. Well, let's do this. This is $14, so let's do this on a range bar, okay? Because everything is easier with a range bar. We'll do it on a quarter range bar. Right, look at all those blue arrows. Ding, ding. Was this today? No, this was earlier this month. Right, the 26th. It must have had some news on the 26th to have all this volatility. This one. No, that was on the 10th. It was on the 10th, yeah. So, okay, so 25 range is too big for this. Let's go down to we'll check it on a dime. Right, for $14, let's check it on a dime and see what it does. It has some pretty good volatility today, it looked like. It didn't pull back deep enough to give us any blue arrows. It's going to come down and hit the ribbon to get a blue arrow. If we change it to a 3 range, that means every bar is 3 cents. Okay, so here we got the blue arrow here finally. Excuse me, my voice is cracking. But there's LTH. On this very small time frame, you can see I had this gap up. That was yesterday. I had this gap up here. Or was that today? That was the end of the day yesterday. So this morning, I guess it was this morning, right at the open this morning, I had the big gap up. Okay. 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 We're gonna have to change the sensitivity again on this when it loads up. This we're gonna have to have that many, I think. And you're currently short. Now this is this time frame. You don't want to look at it in this time frame. All right, with the and you're short right now. Okay, so you just got short. Oh no, you got short down here. 64905, 64905. Yeah, you got short down here. No, we had the blue arrow right there suggesting a long. We had a blue arrow back here and here suggesting, was this all today? This was all today. So we had a bunch of longs in there, only a couple of shorts right here. And you know, with what we do, let me just go back and look at the actual request here. Yeah, with what we do, your stop would be like right here. All right. This one right here, your stop would have been right here. So you would put your trade on. If you didn't move to break even after taking some profit in, your stop would have been right here. So you'd be out of both of those trades right there, short trades. This long trade right here, your stop would have been right here. Okay, you're looking at the prior swing low. Now I like to use minute bars or some kind of time-based bar for the Forex because Forex has a spread. So you're gonna have that spread. And if we use range bars, sometimes that spread in Forex is bigger than a range bar. So that's why it's not really the same thing. If you use a 50 range on this, then you're using range bars, and then the range bars are saying where you should get long the whole morning. They weren't saying to go short anywhere with the range bars. Okay, but you have to keep in mind that the range bars, you're going to have a spread. So the spread is probably going to be, I don't know how many ticks, how many pips is the spread with this, roughly. Because this is a 50 range bar. So if the spread is 50, then you're going to enter here and you're going to get filled up here. That's basically what you're looking at with the range bar. But I would say, yeah, cut your losses on that. This looks like it's going to go up. It's probably going to pull back at some point here. But let's look at this on a little bit bigger picture. Okay, let's get on a daily. Yeah, I think it's going to go up higher before it starts to pull back. Once it does get up to this level right here, then it'll probably do a 50% retracement back down. I would think. This is what I would expect out of it. Okay. Oops, I didn't make extension. This one. This is probably where I would expect it to go back down to once it does go back down, but I think it's going to go back up first. Okay, if we were to draw these things, there's a little circle. Here it is. This right here is probably where it's going to go down to, and this right here is probably where it's going to go up to, is what I would think. Okay. That is what I would think with that. So this right here is a daily. Yeah, I mean, this is the, the short. I don't know. Yeah, back here. Yeah, it's got a lot of selling right here at the top of this. Right, it sold off of this 1, 2, 3, 4 times. So right here. Yeah, then you got a woo spot. You got a woo spot all the way up here. Right here is where you have the cross. Yeah. Up there is the swing high, but right here is we have the bearish cross of the MA1 and the BBC on a daily. So that's a significant area right there. That's, yeah, I mean, we can break this down into a smaller time frame for you. So, if you want, take the trial. The trial is free. We answer all these questions for you. You actually get one-on-one training with the trial if you want to. Every day. Speaking of that, I've run over. I do have 2 meetings that I have to do this afternoon. So I'm going to wrap this up. If you have any more questions, you can email them to support@cfrn.net or support@mytradingiq.com. All right, or just sign up for the trial. To take the trial, I didn't even show you that. To take the trial, you go here to mytradingiq.com. Click on this right here. Let's click on that. You get all the information you need to get into the room in the morning and to get access to us. Okay, and to get the indicators activated. Give us. I mean, we can see what your ID is right here. But if you give that to us when you sign up for the trial, and when you sign up for this right here, it says to give us your TradingView username right here. If you give us a TradingView username, we will enable your indicators for you when you sign up for the trial. All right, and then you set up a one-on-one meeting with us so you can learn how to use them for what you want to look at. Now, what we're showing you right here, primarily in the room in the morning, we trade futures because futures markets are fast, futures markets are quick. I can show you the trade after trade after trade of how it works. If you get into Forex and you get into anything else that's on a time-based chart, then it takes a little bit longer. So take advantage of the one-on-one training that we offer during the free trial as well. Okay. If you want to look at anything other than futures, you should definitely do that. All right. That is it, guys. Again, to take the free trial, go here to mytradingiq.com, click on this button. No credit card required. All right. That's it. With that, I can pass it back out to Fabulous Phoenix, Arizona. Thanks for coming to this session, everybody in the live stream. And back out to you, Dwayne.
Okie doke. Recap of the morning session.
Today it took 9 minutes and 1 trade to get to $1,650.
It's a beautiful day.
It is indeed.
All right, guys, we're going to pick up where we left off. We had just gotten to the ES, and I was talking about step line crossing. I mean, there's still some bullish enthusiasm. We were up against the step line as resistance. We managed to get through it. So the next major resistance is going to be this high, then blue and climbing, because it's directly above price. Now, for anybody that checked in late, right here, all of our members and trial members had these targets last night at 6:20 p.m. Eastern. If you're watching live, you can grab a screenshot. If you're watching after the fact, just hit pause on the YouTube channel, hit pause on the video, and jot down the numbers that are important to you, because it's a market you trade or are hoping to trade. All right. So last night we opened, now the vertical line separates today, Tuesday, from Monday. Back here's Friday, keeps going back. This was the opening candle last night, 6 p.m. Eastern. Flat, flat, flat. But we were above the BBC and we had blue and climbing and we ran right up to the target. This candle opened at 44.29.5. Let's just call it 44.30 to be conservative. Okay, what price did it open at? Yeah, it opened, we'll call it 44.30. So it ran up 7 points to the target. Again, all of our members, all of our trial members had these targets last night at 6:20 p.m. Eastern. When did this happen? The move up. When London opened, we dropped to blue and climbing, found support. And this candle right here, 44.30 to 44.37. And we pull back to the BBC again. The pullback holds more often than not. And then the CPI numbers came out. Initially taking a dip and then taking off like a rocket ship. Now the highest weekly zone for the ES this week's up at 4,600. So we haven't got there yet, but on some of the markets we have. And anytime we hit the highest or lowest weekly trading zone by Tuesday morning, then historically going back to February 14th of 2009, what we anticipate is that by the end of the week, price will be at the other end of the spectrum. Okay, on the Dow, we open that same flat action. When price rallies up to a weekly trading zone, we expect resistance. We got it yesterday at the zone. Got it today at the zone. But there was room here, just in this one candle. It opened at 406 and ran up to 444. You only need 20 points. So that was a couple days of goal for the day. And it consolidated. Only 3 things happen at a weekly zone. 70% of the time will be this: consolidation, consolidation, consolidation. 20% of the time will be rejection. 10% of the time will be slice. Now, a slice is when on the 30-minute chart, price slices through the zone like it's not even there. But we know this isn't a normal move because it's tied into those CPI numbers, which I cautioned you about at the beginning of the session. So the step line has crossed. Okay. Now we need to get below the step line. That's the black line. We need to get below this low. And then there's potential support there. And potential support there, which is lined up with the BBC. And remember, the pullback holds more often than not. See it here, see it here, here, here. Okay. On to Russell. Russell. It's one of the most powerful moves I think I've ever seen in the Russell. We opened flat, just consolidated along the green line, the BBC, bull bear cross, to the CPI numbers, and then whammo. You'll notice on this candle we spiked the highest weekly trading zone. 1777/78 is the highest weekly zone. Because we've hit it on a Tuesday morning, based on history, by the end of the week, price is most likely to be in this area, the lowest weekly trading zone. It's unusual to hit the highest or lowest weekly zone by Tuesday, but over the years we've learned that when that does happen, then what I just explained typically happens. NQ. So we opened last night above the BBC. Took forever, but it climbed right up to the target. Pulled back to the BBC. Pulled back, held. And then off we go. And now we're consolidating at this zone. The step line has crossed, so we anticipate a pullback to the BBC. We've still got one more zone overhead. Crude oil. Here's where crude opened last night. Got below the BBC, found support at the zone, and then that CPI came out and it ran us right up to the long target and through. And if you're wondering why price stopped here, just look left. It clear as day. Now what's happening? We're below the BBC. Now, see this doji right here at the zone? The zone is actually 7815/7820. This is 7905/7910. So this is pushing us up to the BBC, which we expect to be resistance. See, when we pull down to the BBC, we expect support. When we pull up, we expect resistance. And the fact that blue and climbing is now hooked over and turned into red and falling, I would expect rejection. Got the step line, the BBC, red and falling overhead. Question is, if we take out the zone to the downside, keep in mind that this area right here is potential support. If we get below this low right here, we'll call it 77.50. Let's go 77.50 to be really conservative. That would be 77.50 down to the target. That'd be $250 per contract traded. Gold. We opened. Now, price was trapped between support and resistance. It poked up and almost touched the target, but not quite. Then we just consolidated along BBC like all the other markets. Now, when the CPI came out, the initial move was to the downside, hit the target, and it retraced, hit the zone overhead, resistance, pushed it back. The next candle made it through, and then we found resistance at 1974. Step line has crossed, so we will await a pullback to the BBC, and if it holds, and we'll look for a long trade. If the pullback doesn't hold, then that sets the stage for a nice short trade. Silver. Here's the open last night. We just consolidated right along the BBC and the zone. You did get a leg up. Now it only takes a 2-penny move in silver to get your goal for the day. This candle right here opened at 22. We'll call it 22.49 to be conservative. 22.49. It ran up to 22.51. It's 2 pennies. That's your goal for the day. $100. Now, if you're new, you're going, whoa. Well, that's a clever trick you got there, but I can't live on $100 a day. Well, in some countries, you can live like a king on $100 a day, but that's not what we're suggesting. What we're suggesting is that if you will learn how to make $100 per contract traded consistently, so that's 2 points in the ES, 2 points in the Russell, 10 ticks in crude, 10 ticks in gold, silver 2 pennies, whatever makes you $100 contract per day. When you become a member, you get what's called the 24/20 blueprint. First thing you're going to do is you're going to learn the strategy in the live training room. And you're going to trade in your demo account till you put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Once you accomplish that, Blueprint will give you the green light to go live with 1 contract. Now that first contract, that's funded with your startup capital, the money you opened your account with. You're going to trade 1 contract until you increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Big difference between your first and second contract is the first contract was funded with your startup capital. The second contract is funded with profit you earned in the market. Blueprint's going to notify you when it's time to add number 3, number 4, number 5. It goes all the way up to number 20. By then we figure you got the hang of it. So if 2 points a day in the S&P makes you $100 with 1 contract, as you earn your way up the ladder to 10 contracts, those same 2 points, that's $1,000 a day. Puts you in the top 3% of wage earners worldwide. Now, that sounds so simple. Why is it that so many traders fail? 9 out of 10. I'll tell you in just a second. Here's the euro. Here's where we opened last night. Price was trapped between support and resistance. So we broke up, hit the target, went to the next zone, consolidated for hours, And then that CPI came out. Look how far this thing ran down. And it turned. And then it turned around and ran all the way up here. This is the highest weekly zone for the week. Step line has crossed. Okay. Based on history, because we've overcome the highest weekly zone on a Tuesday morning, by the end of the week, very well be in this neighborhood down here. This irrational exuberance won't last. Price rarely travels in a straight line. So, be getting ready for that retracement. Now, on the daily, okay, we're off the high of the day. We're sitting at the 24% fib retracement. And the high put in September 15th at 45.66. That's the next major resistance. The reason so many new traders fail is because they don't have a teacher, a hands-on teacher to teach them how to do the job. No matter what career path you embark on, from a pastry maker to a boat maker, to a pilot, to an attorney, to a brain surgeon, doesn't matter. You're going to need someone to teach you how to do the job. Now, if you Google, you'll get probably 10,000 results of miracle cures, magical indicators, mystical oscillators. Okay? That doesn't teach you how to trade. Probably that indicator set comes along with a PDF, and probably even a video with some very nice cherry-picked trades. And you're like, whoa, for just 99 bucks, I can get this magic holy grail. I'd be a trader for the rest of my life. If that were true, this would not be true. Sadly, this is very true. Some say it's worse than that. If you want a fighting chance at becoming the 1 out of 10, you're going to need somebody. If it's not us, you're going to need somebody who will take a personal interest in you and actually teach you how to trade. Now, we don't teach you how to trade a specific instrument. We teach you how to trade. Once you understand how to trade, you can trade anything. Futures, stocks, crypto, forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. So, as a passport holder, that's the only thing we have to sell. Okay? That's it. It's lifetime membership with no recurring fees, no upsells, no nonsense. It's everything a trader needs, all under one roof, at one hysterically low price. You go here to get your passport, eminifuturestrading.com, a couple mouse clicks, in. Go ahead. If you have any questions, you can call 949-42-EMINI or email support@cfrn.net. Now, what you're getting is not just access to the live training room every day. You're getting access to around-the-clock support via Telegram, unlimited one-on-one private mentoring, strategy you learn, The indicators that you own for life as a passport holder are fluid across all markets and all time frames. As a passport holder, you'll also receive the Logic 247 alerts, concierge trade alerts, and you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And if you're busy and can't attend live, well, you'll have the keys to the private Telegram channel where we post each week's workshop video. We have quite a few different private channels, and the second you become a passport holder, you have access to all channels and all the info they contain. And it happens here, eminifuturestrading.com. Let's wrap it up with our good word for the day. Yesterday, we talked about being poured from experience to experience, the way a winemaker makes wine, by pouring it from one vessel to another vessel. It's a process. Now, what are they saying about you? You go, who? Anybody, everybody, doesn't matter. What other people think about me, none of my business. Nehemiah 6:6 says, "It is reported that you and the Jews plan to rebel." To prevent Nehemiah from rebuilding Jerusalem's walls, his enemies spread rumors about him. In Nehemiah 6:6 it says, "It is reported among the nations," and Geshem says that you and the Jews plan to rebel. Therefore, according to these rumors, you are rebuilding the wall that you may be their king. Now, you can't control what other people think or keep them from saying it, but you can determine how you respond. Nehemiah did. In chapter 6, verses 3 and 4. "I am doing a great work, so that I cannot come down. Why should the work cease while I leave it and go down to you? But they sent me this message 4 times, and I answered them in the same manner." This story teaches 3 important principles. Number 1, refuse to give more attention to a critic than you would to a friend. To Nehemiah, the people who mattered were those who were for him rather than those who were against him. So instead of trying to change minds, he changed gears and moved forward. Number 2, realize that with opportunity comes opposition. Paul wrote in 1 Corinthians 16:9, "There is a wide open door for a great work here, although many oppose me." Criticism is a sign of respect. If you weren't succeeding, they wouldn't even notice you. And number 3, remember that it's the big battles that produce the big victories. The enemy won't send you a congratulatory letter because you have decided to do God's will. In fact, he will fight you every step of the way. 1 John 4:4 teaches, because greater is he that is in you than he that is in the world. Today, God is on your side, so your victory is assured. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.